The Hedgeless Horseman here, it's February the 8th, 2024. First of all, thanks to my sponsors. Let's look at markets. I barely watch the markets anymore, but I guess it's hard to keep yourself from checking. Not much. Well, I guess oil up, gold down a bit, silver up, copper down. Again, it's like, if I had to guess, I would guess that silver's gonna be down tomorrow, and the day after it's gonna be up, and the day after it's gonna be down. And you're doing yourself a complete disservice if you care about these swings. Especially for the gold juniors. The gold juniors are pricing in a crash that has not even happened. Pricing in a crash. It's not like you're paying for gold juniors at $2,047 gold. No, you might be, I don't know what they are pricing, maybe 1,700 gold or something. It's the most ridiculous thing I've ever seen. And I've listened to a bunch of interviews recently with Rick Rule, Ross Beatty, Gustra, McEwen, and they are pounding the table. Don't remember them pounding the table this much, if even this much, at maybe, since 2016 basically. Like Frank Gustra said, this is the biggest dislocation he has seen in his career between the price of gold and the gold equities, meaning they have never been cheaper relative to where gold is right now. Usually, and especially that goes for silver juniors and silver companies, they tend to price in a higher silver price than currently is. So I most of the time since 2015-16, silver juniors, in my opinion, many of them have had a speculative premium put on them. Basically, you're paying more than they are worth right now. And the bet is that silver will simply go higher and beyond what they're pricing in, and that's kind of how you get paid. Meaning that you're actually buying something that is not really cheap, but you're hoping that silver will just, go on a ramp and you will win anyway. So that's not really any margin of safety. That's you're paying for speculation. So that's, at face value, you're already taking on risk. In gold juniors, like Justra is saying, they have never been cheaper than to where gold is. So you're not even paying for reality. And Ross Beatty goes on to say that's like, outlines just how ridiculously cheap they are. And that he, who mostly focuses on Equinox Gold right now and he's rich as hell, he can't help himself. He cannot sit idly by and see the most, let's say, biggest opportunity he's seen in 20 years, or maybe more than that, since 2002 or whatever, go by. He can't help himself. And you obviously see Gustra and McEwen, they are in the private placements. Rick Rule is saying he's buying as well for the first time in many years, but he's, I was going to say, more greedy than most of them, because he wants 5-year warrant, full 5-year warrants and stuff like that, which is great for him obviously, but isn't the best for the, let's say, shareholders or the junior companies that are giving him full warrants, 5-year full warrants. So that's one thing to note. But from what I've seen, Rick Rule usually ends up looking very right, and I have no doubt he's going to make a lot of money on his gold speculation or investing. And he believes, in a very recent interview, he said that he thinks everything is kind of primed, that there's interest there. Not only are they cheap, people are still on the sidelines, but kind of ready to go. So he thinks that basically that as soon as the gold juniors start to go up a bit, and obviously that becomes easier and easier the lower volume there is, and we're seeing record low volume since 2003, meaning of course it takes, the lower the volumes are, the less and less is required for them to actually start an uptrend in terms of absolute money required. And as we know, people don't buy when it's cheap. People buy when things are going up, or especially when they have been going up a lot already. So the lower the volumes get, the more and more sensitive the juniors get to starting a new uptrend. It requires less and less greed for external capital to move these stocks. And once they start moving, they tend to snowball. You know how it is. I mean, personally, it's like, even my juniors, which I think are maybe, some of them might be 50 to 100 to 200% undervalued. If they go up 10%, I get FOMO immediately, and it's like, oh, I wish I had bought more. That's going to kick into overdrive one of these days, and that's why you actually see these juniors go up a lot. And they also point that out. Well, first of all, Rick thinks that this year will actually be a good year. So all, 3 years of bear market, etc. This year, in his opinion, there's a high chance that we might get paid. And Gustra, McEwen, and Beatty point out the fact that, and there's other people as well, that when the junior sector starts going, it can go up 100, 200, 300% in just a few months. And that's why Ross Beatty has said that, people who are sitting here now trading, they're up 10% on a position, they sell, they feel really clever, they're going to post in the forum how clever they were. You see that all the time, hindsight investing, like people just can't help themselves to point out how smart they are if they did a trade with 0.1% of their portfolio in some nano cap stock and are up 10% in 4 days or whatever. They kind of have to post that, oh, I sold, I'm on the sidelines again, I made X amount of money. That's obviously ego stroking. And typically those are not the people I find or I think that actually makes any real money over time. They're looking for they're trying to flip over pennies, if you know what I mean. And that's basically Ross Beatty's point, that the big returns, we're talking months, that you have to resist the urge to immediately sell as soon as you have the first 10, 20 or 30% pop, because it's going to be doubted, and we know this, and probably some people will sell. But like in 2016, when it's really a go, it will just keep going and keep going and keep going. So they're going to start chasing the ones that sold after 10, 20, 30% pop. The only way I can get rid of that feeling is to never basically sell. I mean, sure, I'll value shuffle a bit and all that, but I'm still 100% long, the junior sector. So I get the full brunt of the entire bull market, especially because I never sell low. So I'm always 100% exposed from the bottom tick. And it doesn't matter in that case if I'm down 50% going into the bottom tick, because from the bottom tick to the next peak, they will go up a lot more than 100%. And you can even afford, some companies being down 70, 80%, some might have gone bankrupt, etc. You should obviously avoid that. But that's the big picture. That's where the big money is, not in day-to-day trading. The big money is the multi-month, multi-year moves. And Rick Rule believes that's going to happen. That's going to start this year. And it's like, who knows? If it does, great. If it takes another year, that's great as well. If it takes 3 years, still worth it. So it's like, I've said this before, and I said this long time ago already, and now the juniors are down a lot since then. I thought we were past the point of selling like 1.5 years ago or something. I thought especially the decent to good companies were already cheap. They just got cheaper. That does not change the fact that I think some of them that are down even 50% from when I thought they were the sector is too cheap to sell. I wouldn't be surprised to make money on most of those. If you look at what the price level was back then, sure, it's down 50% to here perhaps. But I expect many of those stocks will be up a lot from that point, even from after having gone down 50%. This is an interesting one. An article: Canada Nickel plans to raise $1 billion for processing plant. This is obviously one of those large bulk tonnage disseminated nickel systems or nickel deposits in Canada, and as it says here, the company is in discussions with the Canadian government, the United States Department of Defense, and other partners in the battery manufacturing sector. I mean, that's the thing. Canada Nickel, I don't think they had I mean, it's up to around maybe 200 million now or something, or maybe more, but that was not much more, I think, than like 60, 70 million not too long ago. And it's like this, if we think the gold sector is dislocated, and of course there you have the benefit of the gold price being at near all-time highs, the same can't be said for nickel, but it's obvious that there's just an immense chasm of dislocation between what governments and the Department of Defense and battery manufacturers and Samsung SDI, Agnico Eagles, and you have, you know, in FPX you have Sumitomo, you have what are they called, the Finnish ones, Outokumpu, and in of course Stillwater Critical Minerals, which I just put out a piece on, and they are actually located in the US. Not in Canada, in the US, and they have Glencore involved. I mean, again, it's like we're seeing that, I mean, you know, looking to raise $1 billion, and everything is happening this quick, basically. So it's like you can see what the, you know, OEMs, like the, you know, multi-billion-dollar companies, what they think about the sustainability of the Indonesian nickel supply, which is swamping the market. This is just incredible. I think, yeah, Stillwater, even with today's pop, is like 32 million Canadian. That's absolutely peanuts. Absolutely peanuts. So, for better or for worse, it's not just the gold sector that is just incredibly cheap. I think nickel juniors are incredibly cheap. PGM juniors incredibly cheap. Typically, and thankfully, you get PGMs with nickel. So it's like Magna is just, I mean, obviously, in my opinion, dirt cheap. I mean, if they're looking to, you know, raise 1 billion to get this in production, that might take, I don't know, 5 years. Magna could, I mean, if they get to go and decide to go, they could be in production in like 6 months. So you can just imagine, I mean, the appetite is so obvious from the large companies. And we've seen offtake agreements being, you know, a very hot thing. A lot of deals with juniors have been about offtake agreements, getting, you know, the right to get the actual nickel from the mine, so they can sell that later on. And obviously, like I showed in my Stillwater Critical Minerals piece, Tesla, I think they how would you say it? I think the government had a subsidy for like 7,500 per car or something for Tesla going into December of last year, so, you know, a bit over a month ago, and I think that went away because they did not have at least 50% of the metal value coming from US or partners. So imagine what a pound of, how much worth it nickel is to these Western guys like Tesla and who knows, you know, Mitsubishi and whatever, Toyota. If it costs them $7,500 per car to, if you know, for them not having at least 50% coming from the US or free trading partners with the US. So it's like if the nickel they have in their batteries, for example, takes them over that limit, I mean, that's an directly added value boost to them. Now, one can have different opinions about, like, should the government even be in here, but it points to the fact that governments, including the Department of Defense, knows that they must have domestic supply of nickel, and the car manufacturers, etc., they also want to have clean nickel domestically supplied, so, you know, out of the grasp of China. So that's why I think these guys are looking beyond Indonesian nickel supply. They want to obviously make, and the US has said as much, they want to, beef up their domestic supply chain. And that's not reflected at all in many of these nickel juniors. It is absolutely crazy. It's basically as crazy as the gold juniors, I think. I mean, in the gold sector, you don't have governments and Department of Defense throwing money at you, saying, hey, this is national security to get these gold mines up and running. So different reasons, but I think that's why I like this sector right now, especially because I don't really have to pick and choose. I mean, it would be worse if gold juniors were the only ones that were cheap and I had some idea of, where I think nickel and platinum palladium is going to go in the future. But the companies, let's say the juniors, were pricing in the current events, let's say. But now they're as cheap as the gold juniors, so I have the luxury of I can be diversified and not feeling like I'm getting shortchanged on the value opportunity. I think that's great. We had some news. Tectonic, they put out. Did they put out all? Tectonic Metals inaugural 2023 drilling intersects gold mineralization. Every drill hole extending mineralization 1.8 kilometers along strike into a vertical depth of 300 meters at flat gold project. The stock reacted by -42%. Now I've been asked about this by a few. This is in most HODL portfolios, and I own shares as well. So it's like, is this a disaster? I mean, what can explain the 42% minus? Well, first of all, there was no snow line type, valley type intercept with 200-300 meters or 2 grams per ton, etc. That's one thing, because I think a lot of people were in Tectonic because they thought they would get rich tomorrow. So a lot of people were just holding out and were going to sell going into this news. And that's part of the reason. Also that, if I'm not mistaken, all the assays are out from the 2023 campaign, which means that people know that, okay, all the assays are out. I can't get rich tomorrow now because there's no more assays until, they start drilling whenever, it's like May or something. So there you have the hot money. They're leaving because they know they can't get rich quickly, so they're taking, I don't know, let's say 40% loss and go and find another company where they expect to get always expect to, let's say, get 100-200% at the next assay results. So yeah, you have that, obviously the boring period, and the fact that, hey, I don't know what their money situation is, but they might need to raise money, or they probably will need to raise money if they're going to do a serious campaign. So you have that bad carrot now dangling in front of the market. But if we think about it, looking at this slide, obviously there's a lot more to drill. One reason, I was going to say, the negative thing about this field season, that the 2023 field season, is that they kind of got a late start. I think it was partly weather, and then they needed to raise more money and stuff. So they didn't at all get the drilling they thought they would. So obviously, if you add on, I don't know, let's say add on 6 holes here or whatever, over 50% more holes. Obviously, the more holes they put in this system, given that it is kind of, yes, it's a bit of infill, or they're drilling close to where the historic hits are, but they're also, drilling in between and drilling deeper. Obviously, if you put in 6 more holes, that just increases the chances of you getting, let's say, a barn burner that the market actually cares about. So that's unfortunate, because it's way harder. And I recently listened to an interview by Frank Gustra, and a panel with Frank Gustra and McEwen, and Frank Gustra said that people have no idea how a discovery works, let's say. That everyone believes that every company is going to hit on the first try. Whereas he goes on to say it might take up to 100 holes before, you know, you find a real sweet spot, whatever. Obviously, what we can say, I mean, just looking at the scale here, there's confirmed mineralization for 1.8 kilometers. So, I mean, I would have hoped for them to have hit, let's say, some higher grades, like, you know, 1.5 or 2 grams or something. I would like that. So that is the negative as I see. Here they actually got 45 meters of 1.52, including an even higher grade one. Yeah, 36 or 1.36. So it's like we have no idea how this is going to turn out. We know this is a huge system, obviously, 1.8 kilometers, and there's a bunch of. That's only Chicken Mountain. Then we have Golden Apex, Black Creek, Horseshoe, Caribou, Jam, etc., etc. Who knows what this district actually holds? I mean, 10, 20 million ounces. Is that out of question? No, I don't think so. But the less you have, obviously, the higher grade you want it, because the critical threshold for success here is probably pretty high. But it's like, it takes no rocket scientist to figure out that, hey, if you have 1.8 kilo, I haven't done the math, but it's like 1.8 kilometers of strike. They confirmed it to 300 meters. There's nothing suggesting really that it doesn't continue to, I mean, how deep? I don't know. 600 meters? That would be one friggin' massive gold deposit. Albeit the question is, okay, what grade is it? Are we talking, 0.6 on average, 0.5, 1 gram? That I don't know. What is actually viable here, I don't know for sure. What we do know is it's priced at 25 million Canadian. So it's like there's no shot. There's no kind of, not anywhere close to being a viable mine priced in. So that we know. And of course, everybody, or a lot of people, from what I saw, it's like pissed management, pissed at Crescat, whatever. It's like that's the funny part. Like, I own shares, I'm not pissed at all. This is exploration. If I just assume that every single company with 10 to 20 bagger potential would immediately, on the first try, give me a 10 to 20 bagger, I mean, then I need to get a grip on reality. That's not how it works. This is a high risk, high reward sector in a poor sentiment environment right now, where we know it's kind of rigged against you, meaning you need more and more to actually go up, regardless how cheap it is. So what do I think is going to happen here? I mean, is this? I don't think this story is over by a long shot. I mean, obviously they haven't even tested all the targets, and there's like, and this is 200. There's huge areas where they haven't even where they don't even have a single hole. I of course hope that they would put in, I don't know, a hole like that and a hole like that and a hole like this, and I mean something like that. But I guess either for reasons of running out of field season and or budget reasons, they obviously didn't get to test it the way they wanted. So this was kind of turned out to be a, let's say, lackluster drill campaign given the target. So the question is, again, volatility is what we thrive on. It's like, okay, it's down to 25 million. Is the story over? Sure, I sure as hell don't think so. I wished to have seen some higher grades, but we don't know where there might be higher grades and any of these other targets. So it's like, if they just keep drilling, they're gonna prove up more and more. That's obvious. Like the title says, they hit mineralization in every single hole. So the more holes they will drill, the bigger it's gonna get. That's the balance of probabilities suggests that. When will the market care? I mean, if it's, let's say, turns out to be, relatively low grade, but they have, I don't know, 5-6 million ounces, and we go into a hot market. Obviously, I think that would go a lot higher than 25 million, because at some gold price, anything works, even up here. but yeah, it's like it's going to be interesting to hear what Quinton has to say. I assume he's going to talk about it on Friday. The main point, I guess, is that it's like this sector is kind of chaotic and ridiculous right now. So minus 42, I mean, at face value, you think that the sky is falling, but when you consider how this works, let's say that okay, a lot of people were looking to get rich tomorrow, so they're gonna sell on this news anyway. I mean, they bought because they thought, hey, I'm gonna sell at 50% plus or 100% plus, and then they'll go somewhere else because almost nobody can actually stick it out for, you know, the entire discovery. Let's say a bunch of people didn't get on board on Snowline, or if they did, they sold after 30% up and stuff like that. Very few people actually caught the full brunt of the Snowline exploration, which took 2 years or something for it to de-risk this much, and that was at a quick pace. Fathom Nickel announced the start of drilling at Albert Lake. I mean, this is going to be really interesting, and this is where's the... So here you have planned drill hole 2024. So they're going to put one there, one there, one there, one there, one there. I think this is the one with the massive anomaly or something. I guess this is probably, I mean, they think that this is lower risk. This is also deeper. So I assume this is, I should go through the entire news release, but it's like there's been a lot of stuff happening today. But this is kind of like, what was I going to say? Tectonic, let's see the market cap. 16 million. And the thing is with these nickel stories, they have some of the highest revaluation paces in the space. I looked at I don't have it up now, but well, here actually, 1 second. So here's the top stock winner 6 months post discovery hole. This is Nova to Novo Resources, nickel. Second one, nickel. Diamond Fields, that's Voices Bay, nickel. So in the top, what's that? In the top 1, 2, 3, 4, 5, 6. In the top 6, 50% of the top 6 highest, let's say, revaluation stories are nickel discoveries. And you can see, I mean, this is incredible because we're talking like 6 months. Usually you would be happy to wait 10 years for these kind of results. So that's the thing with like Fathom Nickel. I own Fathom Nickel as well. I have warrants as well. If they end up making a discovery, a good hole here, it probably goes up. If that leads to a significant discovery, I mean, this could hit $1 billion. I mean, that's just how it is. And then the question is like, how sure are you that they're going to find something and it's going to become something? I have no idea. I just know what it's pricing in. 15, it's pricing in, I mean, you can do the calculation yourself, but what, 1.6% of 1 billion, for example, I mean, that's nothing. If this has 10% chance of success, that's probably a good bet. But again, that means in that case 90% chance of failure, which means that you at least have to have 10 of equally sized cases like this to on balance have one being a success, and that could actually pay for the 9 that were failures, especially if they just go down 50%. So that's the thing. It's like, if you get pissed off about every high risk, high reward story that's, sub 50 million or sub 20 million that does not work out, you have no idea what you're doing. Because they are priced in a manner that in case of success, they have an enormous runway in terms of valuation. Which means that if you have one out of 5 success stories and you hold them through to the, 1-2 years or whatever, it's gonna more than pay for the other 4. If you go all in or something, if you had a bad year and you want to fix everything by, it's like, okay, I was gonna say Tectonic. I mean, they could hit a monster hole, and we're gonna have a snow line type journey. That of course was possible. That is not obviously not out of the question. It would have a higher chance if they got more drilling in, and also it was pricing in nowhere near a snowline type deposit. So obviously, if it was trading at 50 million, if it did end up, immediately hitting something that made it look like snowline. I mean, snowline is at 800 million market cap. Oh, excuse me. So obviously you would get paid for the risk in case of success. But like to go all in on these things, and it's like you're down 50% and you're throwing a Hail Mary, I mean, then you're just shooting yourself in the foot. You should have a the lower margin of safety, the higher the risk, the lower your exposure typically should be. And again, we only see what happened. There was obviously a million different scenarios. What if they this was historic. What if this hole went this way, and this is where the good stuff is? Or what if they plowed it 200 meters deeper and then they hit 200 meters of 2 grams per ton? Nobody knows. We only see what happened. Obviously, nobody can predict exactly what the results are gonna be. So the good things, again, it's like 1.8 kilometer of strike. So this is obviously a huge system. Question is, okay, is the grade enough? I mean, that also comes down to metallurgy. But it's probably a pretty high threshold for success. And now we obviously have a new price to look at, 25 million. So what's the bet from here? Obviously, if, let's say, in 2 seasons they have the next 2 years, next 2 field seasons, let's say they do end up showing that there is high grade, or it's just a monster system, or they hit it somewhere else, and we have a good gold market. Of course, 25 or 30, if you include dilution, or 40, whatever, could look very cheap one day. But there's a whole range of uncertainty. The only thing we know is the current price. That's the thing. So these are very hard to predict the future. We can only see what odds we are getting. So I mean, I think I nibbled today for one portfolio at least. Problem is there's so many buys right now. And again, I'm waiting to hear what Quinton has to say. That's gonna be, he obviously knows 1,000 more times about geology than myself. But Fathom, again, one of those categories. I think I don't know what my portfolio weighting is to Fathom, maybe 1%, something like that. So you can see it's like if Fathom goes down 50%, that's 0.5% to my portfolio. But if this becomes a success, given what we know about prominent nickel discoveries, that could be a material thing. And if they, let's say, have a successful hole, and the stock is just up 50% or 100%, again, depending on the hole, maybe I'll add. Maybe I'll have 3% position that still has, 5 to 1,000% room to run yet, room left to run. In that case, a 3% position, if that went down 50%, they actually did not end up, it was just a one-off. Yeah, I'll take a 1.5% hit to my portfolio. Well, actually less than that, because it has revalued higher already. But that's not a big deal. But if a 3% position ends up going up 5 to 10x, that's a material gain to the portfolio. So you want to give yourself a lot of shots, especially when the runway is very high and the risk is very high. This is one interesting one. I recently talked about K-Report on this one. And it's like, okay, why is it so, cheap? Well, that it is cheap. And now we get the, answer. Okay, people, brokers, etc. knew they were raising money or were gonna raise money. So why on earth would you pump up the price if you want to buy something as cheap as possible? and this, I think, this chart here summarizes the junior sector. If we were to believe that the junior sector, like all the markets and what we read about in financial theory, is that it's rational, hyper rational. You cannot beat this sector. Everything is priced in. By definition, that would mean it would be a random walk on Wall Street. That there would be no patterns, no distinguishable patterns. I think I'm seeing some patterns here. Really, really quick rallies, or I should say, consolidation. A big rally, quick one. I mean, it's just a matter of, I don't know, I mean, what's this, like, a few weeks. Huge revaluation, tops, goes down, consolidates, probably again, same thing. Brokers knows they need money, so they keep price low. Boom, pumps it up and probably sells up here, sell it all the way down and try to repeat the process. I mean, that's basically what it looks like. Because there is not a shot in a million years that anybody could have guessed the news flow from this story. I mean, I remember when it went down here, during this flush, you had some of the most obscene assay results, and still that didn't matter. It went down. You had a big insider buy here, still went down. You had a huge insider buy here, I think, and still went down a bit, or if it was around here. My point is, can you see how ridiculous, again, this sector is? If you take this seriously, you're going to go insane. I started out thinking that the junior sector was rational and that it was very hard to beat, and it's like, yep, if a stock went down or whatever, then it's like, oh shit, I mean, that's bad because it went down. If it went up, it's like, oh, things are looking great all of a sudden. That's great, I'm probably gonna buy more. It's like, no, this sector is absolutely retarded. So obviously, I mean, I'm not gonna do it because I can't, because I have, I'm fully invested and there's a bunch of stocks I can't even sell right now if I wanted to. I have added for the hodl some of the hodl folios, most of the hodl folios today in i80. I think it's dirt cheap given what they have. Now it makes sense why it became cheap. Yeah, so I mean, for all I know, I could see the value trend being something like this. That it revalues when they have money and the market appreciates what they have. And then, when also we've been in a bear market since they started, obviously, so there's a skew to the downside. And then we have, again, the longer it takes, the closer they get to the next price placement. And if you have brokers or whatever, they're used to, first of all, there's so little volume now. So if you have a motivated seller, he's going to trump any buying because there's almost no buyer. So they can sit on the price, they can sell into it, and then they just rebuy their position again down here. And I would not be surprised at all, given how cheap it is, that fast forward 6 to 24 months, it's probably going to be up here somewhere. So just based on this is cheap, it's in Nevada, they got huge resources. I mean, it's just incredibly cheap. They have enormous sunk costs for, like, I don't know what's it worth, but maybe 1.5 billion. The market cap is like 580 or something, and that's just for the sunk cost of infrastructure. Then what it would cost to drill up everything they have, how much the permits are worth, yada yada yada. This is probably one of the cheapest. This is probably one of the most no-brainer value plays based on the sum of its parts, and I don't think they will be going bankrupt given what they have. So I would not, I mean, I'm tempted. It's like, I could see like having a 3-name portfolio, and this would be like 1/3 of it. And if I were to put together, like, okay, not the most exciting portfolio, not where it's like, oh, from this coming drill season, they, a company could multiply their current value. Not like that, but it's like with margin of safety, growth, good jurisdiction, all of that. It's like a safe and probable 100% returner, let's say. I mean, this would probably be one of the top picks in that case. And again, it all makes sense when you think about it. It does the same thing. It's like it's, cheap, not as cheap, cheap, not as cheap, cheap, not as cheap, cheap. And of course, it's like that's one thing I guess they need to get better at, raising money near the top of the cycle. I mean, this is just ridiculous because you see the exact same pattern. So it's like I bet the brokers are probably loving this because they can do the same thing. Drag down price way below fair value, get a position, stop selling, or even buying, who knows, runs it up, can sell, and then they re-enter again at a lower price. The market, it's unfortunate that it works like this, but that's what you get when there is so low liquidity and so scarce, scarcity in terms of money, that you have someone that's willing to write a check but can also, let's say, dump on the stock. So they can do that. If I owned millions of shares and I know there's almost nobody buying in this sector, I can take the price wherever I want, basically. So yeah, that's one interesting, and this is just more proof that it is a joke of a sector. And again, you can see that you can be frustrated about that, or you can just take it for what it is. That's the thing. It took me many years to actually appreciate that, but I'm not trying to make the market something that is not anymore. I have come to grips with the fact that this sector is incredibly dumb, incredibly sentiment driven, and a lot of the moves doesn't make sense. But the thing is that it's cyclical. So instead of getting pissed off and it's like, oh my god, i80 is down, it's like, this might be one of the best opportunities to buy this share since it started trading. It might be cheaper right now than it was at any point before. Yes, we see the share price, but they obviously diluted a bit, but they've had a lot of success. That's the thing. So if we think that the actual value curve has gone something like this is a bigger gap than here to here. So then the question is this a blessing or a curse that it's down, it's a shitty market, and people can do this stuff? Well, that totally depends on what you do. If you sell here and discuss, that's why I keep saying it's not the markets themselves, it's what the decisions people make. That's why everyone needs to be starting to take responsibility. Stop blaming the market. It does you no favor. It will make your it will worsen your returns. If you think that nothing is up to you and it's all the fault of the market, then you are the victim of the market. You're a victim of volatility, instead of like, okay, now the market is being dumb again. I think I know how this move is gonna play out over the next 1 to 2 years. Like why you have the billionaires pounding the table, because they've seen this movie before. The sector has never stayed, no sector's ever stayed cheap forever. And this might be the cheapest sector in 20, 30 years. So is that a blessing or a curse? Again, depends on what you do. If you sell out, like most people do, there's no wonder you think the market is hard. If you use the volatility and see them as buying opportunities, and instead of buying here, selling there, buying here, selling there, you buy here, sell there, buy here, sell there, etc., you would have completely different results in the same stock compared to someone else, simply because of the decisions you make and he or she makes. Novo Resources business review is a pretty meaty one. I mean, they've done a lot. I'm pretty impressed by Novo. There's like, it has made such transformations. And the last piece I did on Novo, I highlighted the fact that like there's not a lot of juniors that, first of all, have their flagship project fail, conglomerates in this case, then buying a mine that also failed, partly because it was mined in the wrong way, so partly, let's say, incompetence of the miners, because one reason for that probably because the iron ore companies were making so much money that the wage inflation was like 50 to 80% in 1 year. So the question is, okay, how good are the ones you as a junior can afford to buy? And we've seen a lot of gold miners in Western Australia shut down. So it's been hard for, it's not only Novo, it's been hard, it's been a disaster for a lot of gold juniors, the post-COVID inflation in Australia. Anyway, regardless of why it happened, and they had debt, and they had liabilities, and still now they're still around, debt-free, 21 million in cash, 30 million of investments, and I think that's going to be, I think that's worth more than that. That's what it's worth on paper. And let's see what the market cap is. 49 million. So they obviously, Novo has a bunch of projects, huge land package, a bunch of projects, deals with De Grey, deals with SQM, deals with Liatam. They have the Pilbara assets, they have the Malmesbury assets, yada, they have gold, they have lithium. So like you get a whole lot of real estate and potential if you subtract the cash and in my opinion underreported value of their investments. So you're basically getting all of this for free. The one thing to note is that it's not free to have this big of a land package. I'm not 100% sure how the deals work, which like, if the Grey covers X and if Liatam and SQM covers, the claim costs and all that. Still, this is one of the biggest land banks there is in the junior space, I'm pretty sure. Many irons in the fire. So at face value, it's probably one of the cheapest stocks in the space. But people have been so disappointed by Novo, and I understand it. Obviously, I never in my life thought it would go down this low. But, kudos to the fact that they're still in the game. And we don't know what's going to happen over the next couple of years. Will they have, does the Grey have exploration success? Do they sell some of their junior positions or their investments and, they have more cash than market cap right now and, going into, let's say, a hotter commodity sector with, flush with cash, 60 million of cash or whatever. I'm just, theoretical scenarios here. We don't know. I just know that it's absolutely cheap at face value. That's for sure. The problem for me is that I don't exactly know the path forward because they haven't really nailed a new discovery, if you know what I mean. So it's a land bank with huge potential. But there's other stuff that is also cheap where it's like more, there is confirmed potential. You get ounces in the ground and all that. So that's the only pet peeve really I have. Otherwise, I think the team is great. Obviously, they, their land mass, they've been able to make a lot of deals. So obviously they, were good at staking, even though it was a bit fortunate to, have the lithium stuff. But at least they made a deal with the lithium deals before this lithium crash. So that's, I guess, on the lucky side. I don't remember why I had Altamira up. Well, I guess, I think I talked about this, and I talked about it on K-Report today about Altamira and Cabral. There's like, I think it's not sexy, but people are missing the fact that, if you look at Cabral, this is the result from Altamira, 88% gold recovery. This is in the saprolite, the at surface saprolites, and it's like the engineering firm apparently told Cabral that they believe the cutoff grade for the saprolite material they have is 0.13 grams per ton. 0.13. So if you have 50.5 grams per ton of saprolite, that could be very, very economical. And Cabral drilled, like, one of the latest holes was like 30 meters, so 2.3 grams per ton. So that should be an absolute cash cow. Even if, let's say $1,600 margin on let's say 10,000 ounces. I mean, that's a lot, obviously, especially compared to these guys' market caps. And the capex might be very low, and those Cisco Gold royalties bought into Cabral, and Aura Minerals bought into Altamira. So they the ones who understand what makes a deposit valuable, an operator, Aura Minerals, who have good free cash flow, so they know what makes a mine good. They're into Altamira or Cisco Gold royalties, who are, since they're a royalty company, they only care about actual production and something being able to become a mine. They're into Cabral. So that's like, third-party validation from the ones who would know a lot more than you or me, even more than, the management of these companies, actually. So that might not look sexy, but I would just point that out, that, if you have a few tens of thousands or 50 or 100,000, maybe in Cabral's case, or hundreds of thousand ounces of saprolite, that could be worth a lot more than the current market cap. But again, the market doesn't care about stuff like that. The market is not thinking. The market only knows one thing, that it's afraid these juniors will go lower. That's the only thing the market is thinking about. Nobody is selling because they look at the facts and say it's overvalued. But that's what explains markets like this. Anyway, some copium, it's like Altamira. We don't know what the drill campaign is going to show, but if that's successful, I would assume we're going to have a breakout out of this trend line, which I guess is a resistance line going back all the way to 2015. So if Maria Bonita, for example, if that drill campaign is successful, we should be leaving these levels behind, and given the length of this, let's say, consolidation, I would be expecting a big move from then on. Because with the saprolite, even 300,000 of near surface 1 gram per ton material might be a company maker, especially coupled with Altamira having 700,000 already a few kilometers away. Imagine if Maria Bonita actually is like 1-2 million ounces of near surface 1 gram per ton material. Then that could be worth, I think, several hundreds of millions of dollars. And you would have a mine, and again, add the 700,000. So then you have a multi-million ounce mine with probably very low capex, very high IRR and payback rate, because you have the saprolite at surface, and then below that you have probably mineralization starting just beneath that. So you don't even have your strip ratio might be almost zero. So you can imagine what that does to payback time without having to truck barren material for a year before you actually get into anything. Some thoughts on high risk, high reward stories, and same I was gonna say goes for like Nican, which I held a small position in and added a bit. Obviously, this is very hot. That's everybody's guessing where the price is gonna go the next minute or whatever. I don't care too much about that. I think, as with Fathom and with Tectonic, I still think there is a chance, maybe higher than 10%, that they actually have something, a discovery, and if they have a significant discovery, this could go up way more than 10 times. That's the simple math behind it. And even if I'm right on one of these three, it could more than pay for the other two, maybe pay for 10 of the other, etc., etc. But you get my idea. Or you get the idea. Thanks for listening. Have a great day. And again, this is not investing advice. I'm biased. I own shares of probably all companies I mentioned. Some are banner sponsors as well. And yeah, I mean, we're playing the. Just a reminder, we're playing the long game. The long game. It's like guessing where the price is going to be. I mean, even here, if you were right on the fundamentals, this stock even went down. But again, that just goes to show. It's like you can see why it kind of happens. If it's a low liquidity environment, there's a strong seller who can just take the price wherever he wants, basically. That's not going to last forever. That's the thing. They can only get away with this stuff in a low liquidity environment where nobody cares about gold. When this sector really gets running, we have no idea how high these. So this is a stock in a bear market. Imagine a bull market. And Rick Rube believes that's going to happen this year. So, and again, to wrap up what the billionaires are saying, that yes, you might think you're clever if you take a 5, 10, 20%, 30% profit or whatever around these levels. But when this sector really gets going, and Rick Rube believes that's this year, juniors can go up 100 to 500 to 1,000% in just a few to several months. I've seen it. Rick Rube and all of those people have seen it. You can go back and look through history for examples of that. That's what I'm playing for. I'm sitting tight until I know we're in a bull, and if we know we're in a bull, we're already up probably 100, 200%. And I will have made money already and paid back the bear market. And if I'm a bit lucky on some specific companies, I think, I mean, some of these, obviously, I think have potential to go up 10x or more. And in a hot market, you could maybe double that again. So yeah, that's the big picture. Thanks for listening. Bye bye.